Hi everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we're diving into a report from BlackRock TCP Capital Corp, and it's about a shareholder vote and something about selling stock for less than it's worth, which, sounds like a fire sale. And before we start, if you appreciate getting straight insights from these corporate documents, make sure you're subscribed. We also have a Discord community where we can discuss these companies, linked in the description below. So what's this all about? This report is about a shareholder meeting held back in June, where the big question was whether BlackRock TCP Capital could sell its own stock for less than its net asset value, which is basically like having a clearance sale on your own company. It's a little weird, so let's get into the details. First, let's talk numbers. Back in March, when they figured out who got to vote, TCPC, that's the company's ticker symbol, had over 85 million shares of stock out there. Now, some of those shares, about 595,000, were owned by people connected to the company itself, what they call affiliates. Not all of those affiliate shares get to vote. Now let's scroll to the vote. Alright, so Proposal 2, this is where the action is. The stockholders, that's you and me, if we own shares, approved the idea that the company could, with the board of directors okaying it, sell shares of their stock for a price lower than what each share was actually worth. They could do this for up to 12 months. Now, how did the vote go? Well, over 31 million votes were cast in favor of this idea, but a little over 10 million people voted against it, and about 2.3 million stockholders withheld their vote to signal they were not in favor. Now let's look at the adjusted numbers. When they took out the votes from those company-related shares, the yes votes dropped a little to about 31.1 million, but the no and withheld votes stayed the same, so the proposal still passed. Finally, the document was signed and approved by Eric Cower, the Chief Financial Officer now. What does all of this actually mean? Why would a company want to sell its stock for less than it's worth? Well, there are a few reasons why this might happen, and some could point out some problems with the company. One reason is that they need to raise money quickly and are willing to sell shares at a discount to attract investors. This can signal they may not be able to acquire investors by marketing their strengths. Another reason could be that the company believes its stock is overvalued, essentially that it is on the brink of bursting. Similar to an unstable bubble, they might sell shares at a discount to avoid a bigger drop later on. Both of these reasons may not paint BlackRock TCP Capital in the most favorable light for investors. Now, what's my take on this situation? I think it's important to keep a close eye on why exactly the company wanted this authorization. If it's about raising money because they are struggling, that's a red flag. On the other hand, if they have a solid plan and think they can use the money to grow the company and increase the stockholder value, it could be a smart move. But as an investor, it could create suspicion of the value of stocks long-term at the company. Alright, that's our breakdown of this filing. What's your take on these results and what they might signal to the future of the company? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate filings. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.